So put it in perspective for me and tell me how you would advise people who ask you, well, what should I be doing in terms of my asset allocation? As we look at a 10-year, by the way, that now is yielding above 1.6%.
Well, I mean, this report is not particularly good for U.S. assets, period, because it says that we've got a limit in terms of how much growth we can get and therefore how much earnings growth we can get. There's also the potential for, higher inflation and therefore Fed tightening and higher interest rates. But I think what you should do is look around the world and recognize that there are plenty of countries out there who've got more slack, more running room than we have, who can actually grow faster with less inflation than we will. And so, I think take advantage of some of the cyclical recoveries in Japan, in Europe, some of the long-term structural potential in emerging markets. So I think this is a time to make sure you're internationally diversified. The U.S. economy has done very well. U.S. markets are sky high. But I think this is a time to think about investing around the world where some of these issues of tight labor markets aren't quite as obvious as they are right now here in the United States.
Diane, just wanted to circle back to what you said about you think liftoff for the Fed, in other words, the first rate hike of this cycle, is likely sooner than many expect into next year. What's your current thinking on when that all plays out?
Well, we actually expect to see some residual inflation, even as some of these pandemic-related things abate, some residual inflation showing up from shelter, really pushing up inflation in 2022, and from medical costs. And we actually expect to see that giving us inflation numbers on the core level well over 3%, which is something that the Fed will have a hard time with in the latter part of 2022. So we now have the Fed doing liftoff in the second half of 2022, closer to the ending of what they'd like to do in terms of tapering mid-2022 than they had liked. They really wanted to divorce those two. The risk is it could be even closer than that. And what I worry about is that although those prices will eventually abate as we get into 2023 and 2024, that is too long for the Fed to wait, and they could overshoot on those rate hikes as we get into the second half of 2022 and get more nervous and have something we have not seen in decades, and that is the Fed chasing inflation and accidentally slowing down the economy with too rapid a rate hikes.
Yeah, that would be a much older playbook, I guess, than one we've become familiar with. And thank you very much for your time today, Diane and David.
Shepard Smith here. Thanks for watching CNBC on YouTube.